Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on the bullish homing pigeon candlestick pattern, right? The definition of a bullish homing pigeon. I'm going to read it to you and then I'm going to show you some real world examples. So it's a trend indicated by a large candlestick followed by a much smaller candlestick whose body is located within the vertical range of the larger candle's body. In both candlesticks, the stock price has to have closed down from the opening price. This pattern may indicate that there's a weakening of the current downtrend. Breaking down the homing pigeon, if a homing pigeon trend, if a homing, man, that's a tongue twister. If a bullish homing pigeon trend is seen in a chart, it may be good for traders to exit short positions and begin to enter into long positions. The worse the downward movement in the stock, the more likely a closing of a short position should be taken by a trader. So what does that all mean exactly? How does it look on stock charts? Well, let me show you. I'll show you several real world examples. Let's take a look at Tiffany, TIF. Now, this one right here has kind of just been trading sideways. Again, remember with these candlestick patterns, moving average lines, very important to be aware of. Again, candlesticks come first, then you want to layer them on with moving average lines and see what price or where price is in relation to the moving average lines. Remember, like stocks are like rubber bands. The more overextended they get, either overbought or oversold, naturally they want to gravitate back to equilibrium at those moving average lines, right? There's many different moving average lines. The ones we like to use are the 9 EMA, 20 EMA, 50 SMA, 200 SMA, and sometimes the 100 SMA. And for short term, 5 SMA as well. But, typically the 9, the 20 EMA, 50, 200 SMA. Again, all a matter of your preference. But candlesticks come first. So, here you go. Big red candle, open up here, close down here. Smaller red candle, open up here, close down here. And then as you can see, no coincidence, a lot of this action happens and takes place right along these moving average lines. So as you can see, it moved up from here. Now this one continued to go up. Doesn't always happen that way. Many times, again, be careful, moving average lines, super important, support and resistance. So as this is moving back up, you want to see it, if you're bullish, get above the moving average lines. But many times it also fails, right? Let's take a look at several other examples. Facebook, FB. Let's zoom in over here. You can see I have lots going on. I'm making all these videos for you guys. So, bullish homing pigeon right over here. So you can see it's actually part of a a 3 inside up pattern, which is another reversal pattern. So you can see here, there's a big red candlestick down, right? You can see the smaller real body closed lower than where it opened. The third candle actually closed above it. So that's a 3 inside up pattern. But this is a homing pigeon that gave you a warning of it. The homing pigeon right here also looks similar to a bullish harami, right? Harami means pregnant, so big candlestick with a green. Usually it's a green one in here. Here's a red one, right? So it looks very similar to a bullish harami. It's a red candlestick, but it's signifying a potential reversal. Again, it's not always going to happen 100% of the time, but have to be aware of it. You can see price wasn't oversold, but it was kind of heading down towards that. Naturally wants to gravitate back up. It's a matter of when it happens. It doesn't always happen. Again, there's no guarantee it's going to snap back, but if it's a good stock, it naturally at some point wants to come back to those moving average lines. Let's take a look at Citigroup here. You can see here, price is falling. Again, right around these moving average lines, very important to be aware of. Bigger red candlestick, smaller one right here, closed with inside of it, and then moved up from there. So again, it's like a very similar to the 3 inside up pattern, except for the price closed lower on the homing pigeon, but on a 3 inside up, it's like price on the second candle closes above. But if you're watching our candlestick videos, this is very, very similar to that pattern, right? Super similar. Again, a lot of these candlesticks look alike. Flags look like wedges a lot. Pennants look like triangles. Cup and handles look like V bottoms. You know, lots of similarities to patterns, and that's why I tell people be aware of what the candlesticks are trying to tell you. Don't necessarily bog yourself down in the minutia in the terminology. Let's take a look at Amazon, right? AMZN, you can see bigger red candle. This one closed below in it. Again, now this one kind of slowly moving up. Now you can also, again, like remember I was saying like it kind of can remind you of the three inside up pattern. It can also remind you a little bit of a bear flag, right? A stock sells off, then it kind of wants to pull back to the moving average lines, right? You see that? Again, if it failed off of that, that'd be more of a bear flag, but it's kind of like, you know, it's starting to try to flag its way back up there. But again, these reversal patterns, they're all telling very similar types of stories. You can see this three candlestick pattern over here. This is an evening star pattern. It's a little bit different than this one, but it's still kind of trying to signify the same thing. Price is falling, trying to reverse here, that spinning top candle. This one's kind of like a combination of a spinning top or kind of a hammer. It's kind of got a mixture of it. But again, price is all about bulls and the bears and that tug of war. And you watch these two candlestick patterns and then see how they are in relation to the third candlestick pattern and see if it's going to be a reversal or a failure. But you'll see lots of similarities with these patterns with, again, something like a 3 inside up or even a bear flag. Let's look at Goldman Sachs. This one's pretty crazy right here. Big red candle, tiny little real bodied one. Kind of got this like long-legged doji thing going on in here. You know, no coincidence above that 200 SMA. Bulls are like, nope, we are not letting it fall that far. Close in here, and this third candle went and closed above it. So again, it's got kind of like that 3 inside up pattern right here. This is saying, hey, nope, we're slowing it down. We're not going to push it down any further. That third candle kind of confirms it. Again, kind of has that 3 inside up kind of pattern. Let's look at Google. This one's, again, a little bit, I like to show and kind of make things off a little bit here. So you can see this one right here. It's closing kind of almost right in that real body. It's very close. So it's kind of close to a bullish homing pigeon, but it also has, look, equal bottoms. So it's kind of got a tweezer bottom as well as a potential bullish homing pigeon. So that's, again, kind of a couple confirmations there saying, okay, this might be a reversal. And then this third candle closed above the second. So it almost has a 3 inside up, as well as, again, this could be very similar to an evening star pattern too, if this one closed like a tiny bit below that. So you can see the bullish homing pigeon, like this right here, could have tweezer bottoms, could be a homing pigeon, could be very similar to, I'm sorry, a morning star. I don't, if I just said evening star, I meant to say morning star. You know, potential reversal on the up, and then you can see kind of has like a 3 inside up as well. So several different ways to look at that to show the potential reversal. And let's take a look at forward. Zoom in here. And where was that one? So price has fallen down here, right around the moving average line, smaller real body, moves up over here. So again, you can see kind of almost like an inverted hammer to a degree, spinning top, these candles showing indecision with all these wicks here. But again, show price is bear flagging, and then it's kind of like, almost got like a bear flag look to it, right? Kind of like the falling down, kind of moving back up, falling down, kind of moving back up. Then see what happens at these moving average lines. You can see all, you know, price really just, you know, obeys those moving average lines. Price is very aware of that because the traders, they're all creatures of habit, and they want to be aware of those patterns and what is happening. We'll take a look at one more here. We'll look at AT&T. And we can see over here, this one right here, really nice looking homing pigeon. And look at this, it only went up 1 candlestick, and then right over this one failed and then fell back down. Just goes to show you, it doesn't always mean price is going to go back up. It's aware of those moving average lines. And just because something's oversold doesn't mean it's going to go up right away. You can see it took a little while for it to reverse and go back up. So the important lesson is to learn candlesticks first, then look at moving average lines. Look at where these patterns, these reversal patterns, these three candlestick ones are usually typically signs of reversal patterns. Look at how far they are away from, overbought and oversold levels. See, oversold naturally wants to gravitate back. When something gets up here, when it broaches overbought, naturally wants to start to come back down. And down over in these areas over here, you can kind of start to see, price naturally wants to gravitate back. Then when it gets above, up here, you can see it naturally wants to start moving back to the moving average lines, right? It's all about support and resistance. The moving average lines get layered on afterwards once you know candlesticks and the pattern and the story that they're trying to tell.